Hello everybody, doing here from DRFX Forex and trading as Daddy Papi in the Dugoscopy trading competition. Now today I'm going to take a brief look at some of the problems that we face as traders when it comes to consolidation patterns. There are basically three scenarios that we face with these setups that can present opportunities as well as challenges. The first of these is to take advantage of the movements within support and resistance. The second one is to take advantage of breakouts when they finally take place. As well as third, take advantage of reversals, known as false breakout reversals, that started initially with an attempted breakout, but which are followed by sharp reversals that take us back inside of the consolidation. So these are three common scenarios that are associated with consolidations that we can take advantage of. However, the problem and the challenge with these scenarios is knowing when it's the right time to take advantage of these movements. Now, the answer to this lies in key candlestick patterns and key candlestick signals. Now, for swing traders like myself who trade on the daily and the 4-hour chart, the key to this problem or to these problems lies in identifying certain candlestick formations. What I found is that there are certain candlestick formations or certain combinations of candlestick patterns and candlestick signals on the daily and 4-hour charts that lead to successful movements in each of those three scenarios. Once we're able to identify what those are, and we're able to apply to the particular type of consolidation, then you'll have a very large rate of success in trading these three scenarios. Now, there are essentially two components or two aspects to solving this problem. The first one, as I said, is identifying the proper candlestick formations on the daily and the 4-hour chart. The second aspect of it is knowing which consolidation setup is more appropriate or is most appropriate for the different type of consolidation signals. What you'll find is that some combinations of candlestick signals will work for certain types of consolidations, but they will be inappropriate for other types of consolidations. So what you'll find is that you might have a successful movement or successful breakout from a consolidation using a particular type of candlestick formation on a daily chart, but when it comes to another type of consolidation setup, that same pattern or that same signal might not work out for you. So those are the two elements with respect to properly identifying when is the right time to take advantage of the movements that we're seeing associated with consolidation. So once we're able to spot, once we're able to know, once we know what those candlestick formations are, and we can apply them to the particular situation correctly, then then you'll find that you have a very large rate of success in trading any of those three scenarios. So take for example these two attempted breakouts on the Euro US dollar. Now on the face of it, these bull candles appear to be fairly strong. So most persons would have attempted to start trading long after seeing these candles appear on the daily chart. But one of the problems with consolidation is that not only do we need to spot the right signals that lead to successful movements, but we also need to be aware of the type of signals that lead to false reversals. There are certain characteristics with respect to this candle as well as this candle that make them inappropriate for breakouts. And when they appeared a few weeks ago, I had noted this in one of my analysis, and I raised the concern that as attractive as these candles were, they had a very high probability of actually leading to reversals. So it was no surprise that this reversal took place, and as well as this reversal, and both have now basically taken us back inside of the consolidation. So there are certain characteristics with respect to this candle that you will see across the currency market, as well as this candle and the breakout, that give these two situations a very low probability of success. So So trading consolidations, movements within the boundaries of consolidation and resistance, of support and resistance, as well as breakouts and false reversals, are going to be taking advantage of them is going to be dependent on spotting the right signals, spotting the right candlestick patterns that lead to successful movements, as well as avoiding the ones that lead to reversals and sharp losses. So that is the challenge that we face when it comes to consolidation in a nutshell. Throughout the week, given that we have several consolidation patterns that have been formed across the currency market, I'm going to be looking to take advantage of some of these movements using the candlestick formations and the candlestick signals and the rules and guidelines that go along with them to take advantage of some of these movements. So I'm going to be showing you throughout the course of this week and the next couple of weeks how to take advantage of them based on what I've observed as the best way to take advantage of them. So until then, happy trading.